Chinese shoppers are actually gravitating more toward local brands. A new report from TD Cowen highlighting that only 9% of those surveyed said foreign brands became more appealing over the past year. That's down 33% compared to 2024. For more, we're bringing in John Kernan, Managing Director of Retail and Consumer Brands at TD Cowen. John, this report could not be better timed, because this is something I've actually been asking a lot of folks that are coming on the show. What is the perception of U.S. brands in China, and are we seeing any kind of this demand erosion? So what's your read through from this survey and the actual sort of sales effect on many of the companies that you cover?
Yes, thanks for having me. Just to level set our survey, our proprietary survey partnered with a Beijing-based advisory who conducted in-person interviews of 2,000 Chinese consumers across a cohort of ages, low to high income, and tier 1 and tier 2, 3 cities. So we covered a good portion of the overall China consumer base. And I think when you look at the survey, 28% of the respondents this year found Western brands less appealing. That's up from 25% last year. So it's a meaningful uptick. The greatest increases in the less appeal response rate, and that was up 450 basis points year over year, was among high-income consumers, and it was also up about the same amount for the 18 to 34-year-old demographic, which is obviously a very important demographic for the Western brands there.
Well, what do you think would make this go away, John? I'm just going to take about 2 to 3 years, from what I've heard, to have any sort of meaningful dialogue with the Chinese and try to come to terms with these tariffs. I mean, is there anything we can do to escape a recession, in your view, given your recent what you've learned?
Well, yeah, the survey dealt more with China, and I think certainly if the trade war and the tariffs stand where they are now, China would. Our strategists see their GDP growth getting cut in half this year to about 2.5%. I'm fairly optimistic for the U.S. economy. I think there will be trade deals announced, maybe not with China, but we're pretty optimistic on the state of the consumer's balance sheet. If markets stabilize, that's a big boost to the high-income consumer, and 10% of the U.S. population accounts for 50% of total PCE spend. So I think that consumer is in decent shape. Again, confidence has definitely been damaged, but I'm optimistic as we get into year end, there's going to be tariff deals, and the U.S. consumer and the job market will carry us through.
I want to dig into some of the companies that you cover that were covered in this survey also. And by the way, I had not heard of some of these Chinese-based brands, footwear brands, apparel brands, Li Ning, for example. But you talk about Nike in the report, that it's still in the lead, but it has been decreasing in terms of sort of its brand equity and view in China. So for a brand that's already sort of embattled in the U.S. as well, what does this mean for a company like Nike and controlling what it can control? Is there anything that it can do about it?
Sure. Well, I mean, let's start with the fact they're still number one in every footwear and apparel category we surveyed, in most cases by a comfortable amount, but they are definitely losing preference in every single one of those categories. The big share gainers are Li Ning, Anta, and Fila. Fila is actually run by Anta Sports. And those three have been gaining share. They're obviously local brands. They've got localized management teams. They're making better product. Li Ning even sells shoes in the United States now. So, they're still much smaller than Nike in scale, but they are gaining share. Nike didn't lose share to their Western peers in the survey. It was all the share they donated was essentially to the upstart China local brands.
Yeah, I find it really interesting.
In terms of what they can do, in terms of, I mean, they need better innovation. Clearly they leaned on lifestyle products and maybe streetwear too much. You're starting to see some improvements in their running portfolio, the Pegasus 41, the Vomero. I think you're going to see much better innovation and much less reliance on the lifestyle-based part of the portfolio.
Go ahead.
It seems like most of the survey data that I've heard in recent weeks is so negative across the board. And at what point does the actual hard data really start to roll over to join all this negativity? I mean, you mentioned, survey after survey, it's extraordinarily negative. We know China's in very rough shape. I mean, they have, 3 times the banking system of the U.S., but it's heavily levered to real estate, which is down now 30 to 50%, and their interest rates are at rock bottom. So they're certainly struggling in many ways. The question is, when does the data actually turn negative for the U.S.? To your point, I don't think that necessarily has to happen, right?
Not necessarily. I mean, China, look, the consensus has been negative on China. The consensus on Wall Street has been negative on China, I think, for a long time. This survey we published today probably reconfirms that consensus view. Now, certainly valuations are priced for that. Many of the companies that we cover and have exposure to China are near their 5-year lows in terms of valuation. I mean, it's not just because of China. Obviously, the tariff situation, the overall macro picture, the competitive environment here in the U.S. all plays a role in it. I'm in the camp. Like I said earlier, I'm optimistic on the state of the U.S. consumer. Consumers can say one thing in a survey and then do something completely different when it comes to actually spending their money. Sometimes when consumer confidence is low, it makes people don't feel good, that they'll go out and buy something to make themselves feel better. Generally, the U.S. consumer, in the consumer surveys you see, whether it's the University of Michigan Sentiment Survey or the Conference Board's Consumer Confidence Index, they are always most confident at the top and always most pessimistic at the bottom. So sometimes those surveys can be good contraindicators because they tell you how a consumer is feeling at a point in time, but not necessarily what they're going to do in the future.
Yeah, so on that point, John, hopefully as these companies start to report their actual numbers, we'll catch back up with you and see how the survey has matched what people are actually doing. Thanks so much. Really appreciate it.
Thank you.